Hello and welcome. Well, it has been a strong start to 2023 so far for most risk assets, which is encouraging after a disappointing December and a difficult year for investors in 2022. Most equity and fixed income markets have delivered positive performance so far in January, and markets were pushed higher by a rebound in emerging markets and China in particular, and European equities. However, US equities have actually underperformed. So two important factors seem to be pushing European and emerging market equities higher. First, economic data from China has been positive and surpassed expectations. Industrial production and retail sales were largely above expectations earlier in the month, and it's confirming the view that China is emerging strongly out of COVID and potentially faster than anticipated. And we increased our allocation to emerging markets with this in mind late last year. In Europe, the price of gas went down significantly in January and is now well below the peak from 6 months ago, even down more than 80% for short-term gas delivery. The mild winter has been particularly beneficial and could help Europe avoid a recession that was once seen as almost inevitable. Elsewhere, macroeconomic data has been mixed. Business surveys, for example, were poor in the US for both manufacturing and services, and data for industrial production and retail sales was also disappointing. On the positive side, the level of employment in the US remains very supportive, though with limited wage growth. Inflation is continuing to reduce gradually and in line with expectation, which in itself is very positive. Well, companies are starting to report their earnings as well for the last 3 months of 2022. While we think that some results will be disappointing and could even be negative compared to the same period in the previous year, the numbers have so far been better than anticipated. Firms are showing some level of resilience, which is really encouraging. So overall, it's undeniable that over the last few weeks, market sentiment has improved. The mood among investors was particularly low at the end of 2022, so it's positive to see that attitude shift and for this to be reflected in market returns. However, volatility will likely remain elevated for the time being, but we are happy for the time to enjoy a welcome positive start of the year. As usual, thanks for watching, and for more investment updates, visit the Nutmeg app or the Nutmegonomics sections of the website.